OG for my, OG for my, OG for my. All right, welcome back, guys. This week, happy weekend, and happy that is happy weekend. And how are you doing? And how was the whole week? And I hope maybe some of you like say some people message me that I didn't do video this week and they missed my content. I appreciate you guys for keeping up. For those that keep up and for those that are meant to check up on me for not for the little times I did not show up. I actually understand that I was maybe there was a challenges or so. So I was kind of really kind of busy, and that's why I couldn't be able to share content with you guys this week. But I promise, going in this week, I will try my much as possible to also do the content. But I'll be very very busy as exam is approaching in my own institution, and I have a lot to couple up and to deal with life. So, but mind the way, this is my sole source of interest in life. So I'm giving it my all in all. Whatever times I got, I take time to go into the chart, and even if I don't trade that day, I just want to see how price is printing because there is a point in this kind where when you get to that point, you begin to feel like everything is beautiful, like the way price is delivering, it is just so beautiful and perfect illustration of price. Like you might not understand what I'm trying to say now, but with time, if you also take your time to learn diligently, you will also know and also have an understanding of what the market is doing on a daily basis. Imagine you come in the London session and price delivered so efficiently. Like every minor fluctuation in price, you could actually see that this is going to happen, this is going to deliver like this is going to deliver like this, and if this happen like this, then this will be the case. If this done like this, then this will be the case, and everything keep on like occurring, and sometimes it's just kind of wonderful. You now begin to see as if it's a beautiful thing, like it's a beautiful woman in your front that you actually know when she's gonna offer pound that she's gonna put it on. So like that's how beautiful it is. And I just wanted to say that yeah, thank God we have successfully installed a software which was prescribed to me by one of my lecturer in school. So this software is kind of great. I'm trying to work it out and I see how it is working. Now we can actually record a video more than an hour. So don't I'm not going to be rushing, but just like I usually do if I'm doing a video, I'm trying to rush it out, cover with time. So with this, I'm not going to be rushing my videos. I'm going to take my time to show you guys and also take my time to teach you guys insight every day. All right, so with that being the case, we're going to go into price, and I hope this welcoming message starts you well. So we're going to go into price, and currently, what you are looking at is the monthly contract for DXY for Euro US dollar. So this is the monthly contract for the Euro US dollar, and we see that the week we are about to begin is going to be the last week of this month, and also the week we finish is the third week for this month. So, with all this inclined, we're going to already know that the week we are entering might be impulsive or not. And then, if we are going to be impulsive, are we going to be impulsively lower or impulsively higher? So, I'm going to mark out this area. I believe you guys have seen all this area and you have seen this. I intended to bring all this so you see this, and you have reason and the logic why we have to come here. This price lower was a liquidity sweep, and we see how we rally back up, right? Now we are consolidating to manipulate into the premium or into the discount price, right? When price gets into the discount before we spool higher. So Overall, what we are looking for now is markets for euro to manipulate and distribute. This is accumulation, manipulation. We are waiting for what? The distribution. We are waiting for the manipulation to occur. So we are anticipating for the manipulation. And how are we anticipating for it? We are anticipating for a lower price manipulation lower that is going to deliver us what? Higher subsequently. So if that's going to be the case going forward, then we need to also or think go on a lower time frame to see how we can refine these areas of interest, that is from this low to any point in this area that have maybe a PDRA that is more suitable and more inclined to deliver price higher, where we're going to react from. So now I'm going to mark out this whole area. So we're going to anticipate how price is going to deliver higher within this specific range. So this is it. I'm calling out this area in price. So now that is the area I marked out. So this is the current month we are trading on. So if this current month we are trading on, we see a swing high here. Swing. This is a swing high, a lower low, and a lower low between between it. It is between a lower lows. So and it is the higher candle. So on a monthly, this is a swing high that has been formed, and this current month confirm that swing high because it is the current month that did not pass this high. And now it is showing momentum that we are coming lower. How far can we go? Are we really going to take these areas of interest? Yes, we are anticipating for that. But we should also know that since we are in accumulation stage, we don't know when they are going to leave the accumulation stage. So price might not be willing to leave that accumulation stage right now. Imagine, look at since when we get into this accumulation. This particular down close candle was the candle that begins this accumulation. If you know how to identify your accumulation areas. So this down close candle, which is the candle that is formed on 1st of February 2023. Imagine since 2023 we have been since January 2023 we have been on a consolidation. So that is why it has been so difficult for you to actually do any reasonable thing in price, because we spoon higher, spoon lower, spoon higher, spoon lower. But if you go on a lower time frame, there could be opportunity, but the opportunity will be overthrown when price is actually moving in a higher time frame on a particular direction. All right. Uh, yeah, if price is actually moving on a specific direction, that is very, very, very good indication that yes, we are, seeing what is going to, like, if it begins to go on a lower time frame to spoon, to be a buyer or be a seller, you're going to be on the right side, on the favorable side of the market. So we'll keep looking at these things that this condition we have laid down. As a trader, you have to be able to lay a condition. That is just why you need an edge. An edge will teach you to be able to lay a condition based on what price has done in the past, right? This condition I'm laying now is not because I'm just laying it from my head, right? Because whenever price does this, this is what it usually do. And now that does not mean that price will have to do that also, right? But we want to see if actually this edge, it will be amazing for you to discover that what you say or what you think you know is not right, or what you think you know is right. And to be honest, this whole thing that's on a monthly time frame, if you go on a lower time frame, especially on a 1 hour from 1 hour, from 4 hours to 1 hour lower, you're going to see price give you exactly this kind of price action, especially intra-week and intra-day price action will definitely show you an accumulation, manipulation, and distribution. And this is how it actually occur if you know how to identify. Imagine if you are a unicorn, or let me not even say unicorn trader. If you are a day trader and you make use of Asian, London, and New York session. Yes, what did they say about Asian session? Asian session is an accumulation stage, and in London session is a manipulation to the right price. then the New York session might be a continuation or might be a reversal. Two conditions for New York session. Now it is left for you to be able to know if the New York session will be a reversal or it will be a continuation from what the London session. And if it's going to be a continuation from the London session, it is always going to give you what an optimum trade entry. And if it's going to be a reversal, it is always going to what take what a previous session high or a new swing high on the 1 hour or 15-minute time frame. Any swing high that is there, it is going to take it before going. Now, why am I telling you about lower time frame when we are on a higher time frame? Because I want to lay that condition. If you trade with that condition, I want you to remember back and use that perspective for this, right? If you compare that perspective with the current price delivery for the monthly contract on Euro and DXY, you're going to be able to come with a condition for price on this higher time frame. So that's in the case for the monthly. So, but I'm not going to really, I didn't write anything about the monthly on my journal, but I'm going to say I have a statement for the weekly. Why? Because the monthly, I just want to use it to explain something. You also need every week, every weekend, try to look at your monthly contract, because that in itself is a very big signature and price for you to keep up with. So I'm going to go to the weekly time frame. Now I'm going to take my price back to weekly. So if you can also see, this is the down close candle that I say make that accumulation, right? You can see that down close candle. That is where we start pulling higher. We take it, come down, take it, but we didn't take it. Now we rally and take it. Now what happened? We rally back, we didn't take this, and we are going lower. So if we take this now, how far can we go? We have sell side here. If we take that sell side, we have what is here on a weekly perspective. We have inversion fair value gap. So as soon as price get below this sell side liquidity, then we're going to look for how they are, what is showing in price. And if it's actually a liquidity sweep, it is going to come back up very, very fast. So, since if euro start coming back up, it's going to be negative for the dollar. Then that means that the price up will not be that impulsive as the as the US are not trying. They are trying as much as possible not to make their currency go lower right now against any other peers. So now let's look at our current condition and forget about the future condition. Now let's look at the current condition so that we'll be able to come up with a bias for next week, right? And next, which is the week that we have begin today, because I'm recording this video on Sunday afternoon. So yes, this uh this week, which is this particular, if you count from this candle, 1 2 3, so the third candle is a weekly up close candle that creates a fair value gap. Now this fair value gap has actually confirmed that this is a bearish order block. So not wasting our time, I would like to read a statement that I have here, and I hope that statement will serve us well. Sorry. The the Euro US dollar weekly contract for uh the Euro US dollar weekly contract for week of 14th to 20th April 2024, which is the third week, deliver a bullish up close candle leading to the formation of a weekly fair value gap or CB, those confirming the weekly up close candle formed on 1st April 2024 as an order block, which is what a weekly bearish order block. Just like I have said, this particular week confirmed that this week is a bearish order block, and you can no longer refer to this as a on another block, rather a proportion block. We have a first order block here. We react from there. we have, which makes this a proportion block, now a new proportion block. Now as we keep forming a block like this, it is getting weaker. Know that the first one, which is this, is the strongest. The second one, which is this, is still strong, but stronger than this, and this is stronger than this. So as the generation keep going, it is getting weaker. That is what I have understand from price. But mind the way, for us to keep on favoring this price, we need to continue seeing it creating a fair value gap and also sweeping a sort of what area of liquidity, which now giving us a confirmed new range, because that fair value gap actually sweep this liquidity, and it is going to be so effective that it's going to what spool price. If you see this one did not sweep this liquidity. It is this actual one that actually sweep this liquidity. So this one might be more effective than this. That is, it might deliver price more than this. All right, but this one is stronger than this, and also this might deliver price more than this. So I don't know if you are new, this is a condition I'm just setting for you, not from my unconscious mind, but from practice and from what series of prior action. Why? Because this take what? A liquidity. And as it takes liquidity, not just a liquidity sweep to go higher, but it takes liquidity and it's continue to go. That is, it is the one that give us what? A shift in market structure, which other people refer to us as change of character, or break of market structure, or change of character and all that. I don't know that that's how they call it. But we call it, an ICT trader, we call it shift in market structure. There is a shift. I think that that English, sometimes the way you refer to things matters most. So that English that you call it shift have more effectiveness than use on a break on something. If it's actually a break, that is, I don't know, but English matters, or the language you use to describe something matters as well. So then uh, let me continue. The current week candle sweep previous week low and price into the previous week inefficiencies and reprice lower, showing a strong signature in price and what to expect next week, which is the new week that we're about to begin. That is, we take sell side liquidity, which is the only liquidity that we take, then we price into the inefficiencies, and price remain within that range. Conversely, the XY weekly contract has formed a buy side liquidity, which is a fair value gap or a BC, with the formation of a weekly bullish order block. That is same with this, but it's in inverse. I'm going to take us to the weekly contract for DXY, but let's finish with Euro. So casting forward, I am anticipating for Euro to deliver and completely fill the weekly imbalance before trading lower. And as this new week sets the leg for the end of the month, April 2024, we need to take more reasonable decision to avoid any irregularities that might take place in the market. So as this new week begins like this, as this new week is going to be the end of the week, we need to take one more reasonable decision. That's very important that you know more reasonable, because there is a reason behind that. When, at least when being the end of the month, it might also have the on the weekly profile, it might also on the monthly profile, it might also be the low of the month. But you should also know that what it you need to take a more reasonable decision, not just taking decisions that are not reasonable with the condition of the market. So I want to see if I can post, because I want to take water. Checking. You see, I've not used this software before, so this is actually my first time, and I'm trying to see if I can pause it, and I'll come and continue. Where can I pause it? So this is very very. interesting topic that we all need to take into consideration. That we all need to take into consideration. And for us to do that, I only see stuff exist. Okay, maybe I need to ask for someone to show me how to pause and continue on this software. But not notwithstanding, uh, let's continue. So continuing, uh, I'm going to take us to the monthly, yeah, to the weekly contract for DXY. But before that, let me have the last statement for the weekly contract. Now, the displacement between the weekly fair value gap low and the bearish order block opening price will be the ideal area to look for an opportunity to to engage to engage or sell in the market, to sell euro lower. That is this displacement from this particular area to this red area, these two lines. So when price gets up into this area, that is the ideal area where you'll be finding opportunity to be a seller. When price gets within this area, I'm not looking to be a buyer anymore, because as soon as we get into this area, it is now disqualified the range that we are pricing into a premium. So if you want to really be a buyer, maybe if market open price lower, you can buy and deliver price into this fair value gap, but not above it. So be careful how you engage with price. I'm going to talk more on this on a lower time frame, so it will serve us more understanding of price and what to look out for. Now, in conclusion, I am anticipating a bearish candle, that is a down close candle at the end of this new week. So my longest position will be going for short position on euro and long on DXY. I hope this make it clear for you guys. So let's go to the XY. I know I don't usually waste much time on the XY, but let's explain some terms on the XY. I would like to take it to monthly, but let's just stay with the weekly. Now, same condition has occurred, but it's inversely. So the DXY and Euro trade inversely to it between each other. So if the XY is going up, which is risk on, then Euro will be going down, which is risk off. So there is what is called risk on and risk off scenario. And I just explained that risk on is when the XY is going up, and risk off is when the XY is going down and what other pairs are going up. So these two scenarios are the ideal scenario for price. So we can see that the accumulation stage for this market on a monthly, this candle begins that accumulation, and ever since then we haven't really make any reasonable move higher. And if we take this buy side, the next closest buy side liquidity on a weekly time frame will be this buy side liquidity, which is a swing a buy side. So I'm going to do that buy side. So which is the swing high. So that is where we can also look out for after we have taken the current area of liquidity. I told you guys I needed to take water, but let me take my water, please. Yeah, thank you for your patience. So yeah, Alhamdulillah. So what we are looking for DXY is going to be a risk on scenario where we are expecting price to open, fill in this fair value gap. I want to see this fair value gap completely filled. Not I don't want to see market treat it as an institutional order flow entry. completely filled and tap on this bullish order block, right? So if price fill it, tap on this bullish order block. So anything when price come between this line and this red line, it will be a potential area to be a buyer, right? That's what I'm saying. For us to be a buyer, we need to see price get into these areas. When price get into this area, I don't know if my head is going to be blocking where I'm calling now. Let me shift it because since I'm showing my face on this on the market. So these two area, which is this low, this fair value gap low and the other block opening price, oh sorry, yeah, order block opening price, which is the bullish order block opening price. I'm looking for price to want to remain within this area. So I don't want to see us price lower. So when price get here, I'm going to want, I'm going to be a buyer from this area to buy. And if you can see on a longer time perspective, the market is engineering some form of what buy side, sell side liquidity below price, because this is a sell side, this is sell side, this is sell side, and if we form a new word swing low now, it's going to be another sell side liquidity. And that's how we are going to do it until we get to this bearish order block. And anything inside this bearish order block is just going to what sharply tip on it and market will close below it. So the next area is this inversion fair value gap, which is another very sweet area or sweet spot that price is likely to retest back into. God, how I'm sweating. It's not easy, sha. But these videos actually help me to explain things in my own perspective, in my own language. Although even if the theory I am using is not programmed, it's not done by me, but it gives me an avenue to be able to explain things in my own perspective. And sometimes I went back, I usually go back to watch myself talk and see, how impulsively I am when I'm talking to you guys. But so I hope I'm not rushing, but yeah, this is me and this is how I actually want to record my things and how I want to keep this video with you guys. Wow, there's no light, and I guess my face will not be that showing much now, but we can still make use of this one. So let me see. We can still make use of this. Yeah, we can still make use of this and go with this. So NEPA, that's Nigeria for you, my man. So now, what am I looking for on the lower time frame? Now, the Euro US dollar daily contract for the week 14th to 20th April 2024, which is the third week of April 2024. Now, the Monday candle, I'm going to talk about each day, each and every day of this week. Why? Because I did not do video for them, and that's why I want to refer to this. And if you are smart enough, you should also know the weekly profile from this explanation. So the Monday candle delivered lower, sweeping previous week Friday candle low and fall short of the daily fair value gap or BC, which also set the delivery of price into the word fair value gap. So what I'm trying to explain, this particular candle, I instead of wasting our time, let me just go and spoon this area. This is our new range on a daily contract. This is our new range. Alright? This is our new range. Sorry. Yawa. Outside we see yawa. That's it. This is our new range, which is this swing high and this swing low. Is our range on a daily contract, and the 50%, I'm going to use my Fibonacci to call it out, because some people like where you see the 50% is here, I didn't see it, or let me use my Fibonacci to explain that for you guys. Now on Monday, price open, price higher, rally lower, take out previous week low, previous week Friday low, and what also set leg for price delivery lower inside that daily fair value gap in the next day. So it is the candle, or it is the candle that also confirm that we are going in towards the fair value gap. This particular area of interest is the daily fair value gap, also known as BC, which is an imbalance, which is, let me say, buy side imbalance, sell side inefficiency that was formed in a long time price. If you go on previous week, my previous weekly video, you're going to see that. So the Tuesday, the Tuesday candle is a down close candle that priced into the daily fair value gap or BC, consequent encroachment, and price higher, and also the low of the week. So on this weekly profile, this particular candle formed the low of the week, and also it is the candle that deliver inside the fair value gap and fall short of the consequent encroachment of that fair value gap. This black line is the midpoint of that fair value gap. So we see it's a little bit lower towards that area of interest. The Wednesday candle retest on the daily fair value gap uh, of the daily fair value gap high, and what, and grab more liquidity that spoon price higher into the daily fair value gap or CB, formed by the Monday candle that did not deliver completely with the previous week Thursday candle low. So there are so many things that you need to see in price. And I think this should give you understanding and more learning about how to read this market. This Wednesday, we open price into the fair value gap high, but we did not take Tuesday low. That is, we can say it priced into the consequent encroachment of the Tuesday candle low, Tuesday candle week low, then spoon higher and price into this fair value gap. You can see the Monday and the Thursday market is there is a fair value gap. It is the candle price that lead us to that fair value gap, and that fair value gap did what? Drive us on the consequent encroachment of that fair value gap. They drive us lower. So we are going to now, we have now used that fair value gap, and what will happen? We are going to continue to see a higher prices into the premium price. Wow, look at how I'm sweating, bro. Just now that they take light far. Now, the Thursday candle formed formed the high of the week that repriced into the daily fair value gap and CB and deliver lower, having a down close candle. And the Friday market delivering, so having a down close candle, which is this Thursday candle. So this Thursday candle delivered lower after sweeping Wednesday high, and it is the high of the week. Then that deliver us price and also confirm the use of this daily fair value gap. Now, why this daily fair value gap is not that effective is because it is in a discount price. Now, price spoon, and on Friday, the Friday market deliver lower and reclaim the daily fair value gap or BC and price higher, having an up close candle. We can see that this Friday market have an up close candle. But what happened? We deliver lower excessively into that fair value gap again. What do? We reclaim. We see how market is sucking liquidity from that area, reclaiming that area. Why? Because when we are coming back, we are not going to look at it again. It's just like you are hitting a door is locked and you are hitting that door consecutively. The more you hit it, the more it gets weaker. The more you hit it, the more it gets weaker. So when by the time we go higher and come back and hit it, we are going to break it out. Like the door is going to be broken and price will be able to continue going to its direction, because it is actually forming a support for price now. And if that support keep being hitting, price will definitely make use of it. So that's so the whole daily weekly profile, that is the whole of this weekly profile I've just explained, shows that euro is likely to continue pricing higher, and the current daily price range have the 50% or at the weekly bearish order block week low, which makes it more interesting to express price to rally into the area onto that area of interest. Now listen, what I'm explaining there is that the the current price delivery, right, has the current weekly price delivery has shown that price is going to continue going higher. Not totally higher, oh, please. We are going to price into this fair value gap, and we are going to use this consecutive down close candle bearish order block as a bearish order block. And also, do you know you can classify this up down close candle as what? Um, as what do we call it? Bearish breaker. It's a bearish breaker because there is a high here, a low, a higher high, and a lower low. What happened? That is a bearish breaker. That's a bearish breaker. Imagine you have so many confluence like this supporting the idea that price is going to go lower next time, right? So that makes it more and more interesting to to actually knows that you have a specified direction when price gets into that area of interest. So I am not interested in seeing price getting inside this fair value gap. Although if they do, it makes it more premium. So let me show you guys the differentiation between those.